Now, opinion is still split on whether the South African Reserve Bank will hike the repo rate this week. But one industry that is not keen to see an increase is the property sector. And according to Seeff Property Group Chair Samuel Seeff, the interest rate is already too high. He says that the South African Revenue Service, or rather the SARB, should keep the repo rate unchanged because it's burdening consumers, homeowners and potential buyers. It's also impacting on property sales volume. Samuel joins us now. Good afternoon to you, Samuel, and thank you so much for joining us. The whole issue around affordability is also compounded by all other variables that you have to pay for as a household, let alone for your property and trying to retain that.
Yeah, very much so. Good afternoon, Cindy. So we've had significant increases in interest rates, up from 7 to 11.75. That's already a 67-68% increase. Further increases will take it beyond the 70% increase since the interest rate hike. And frankly, it's enough. I don't believe the buying consumer or the consumer in South Africa, and certainly the property buyers, can sustain much more increases. And I don't think they're necessary. I think the inflation we're dealing with, which has come down, is largely import driven. I don't think there's been an over-exuberance or overspending by the South African consumer. And I think to further go ahead and raise interest rates again at this stage would be, in fact, to punish them when already they've had significant elements that have been against them in this build-up. So my view is ideally we stop the interest rate increases, we hold off for a while. I'm quite sure that inflation will decrease and then we'll be able to go on a downward path in terms of this interest rate cycle.
Yeah, but would you say, but this is an inconvenience, unnecessary evil that we have to endure so that the Reserve Bank can stay within its targeted mandate of containing the interest rates and also controlling the currency?
Yes, to an extent, and I think we've had that point and we've now reached it. To go beyond is going to be one step too much. We increased interest rates, the last interest rate hike, and what happened? The rand fell away dramatically, hitting 19 and beyond to the dollar. So that certainly didn't help. So I don't see a further increase assisting. I think we've seen in the US, the headline inflation is down. It's down to just over 3%. They're significantly down. The Fed is talking about no more increases. And for us to increase at this stage, I don't think we'll have the benefit. What it will do, though, is for those who are already significantly under pressure, financial pressure, it will increase the burden. And I don't think that's good for the country. I don't think it's good for the economy, and certainly not good for homeowners having to repay bonds.
Yeah, and those that are over-indebted, maybe you can paint a picture for us with the impact it has on the property sector, particularly residential property, the ability for young professionals to have their first home and whether they can sustain it over this period as well.
Well, Cindy, you could argue that we've sailed into a perfect storm, particularly for new and first-time buyers. We've had interest rates that have gone from 7% to 11.75, and that's the main determinant. If people can't afford to make repayments, they can't afford to purchase. But we've had a particularly cold winter, a wet winter. We've had electricity shortages and load shedding, water restrictions in certain areas within the country. Our electricity tariffs have gone up 17.5%, 18%. There's been little to no growth in GDP, so no real new employment. And the confidence factor has been extremely low, as well as the general negative sentiment. So that's all leading into what I call a perfect storm for buyers. And it's making it difficult for them to buy. Equally, on the other side of the coin, you have the sellers wishing to sell, and there's not the normal supply of demand that we're used to from the buyers. And so we're hitting a stalemate position. Transactions aren't going through in the volumes they did. Buyers can't afford to buy, and that's obviously impacting on the whole property sector as we see it.
Yeah, but as you're saying that there's a myriad of issues that we put into this melting pot, so to speak, let alone the fact that, some industries are still recovering from the COVID-19 and the impact thereof. There may be relief funds that government had provided, but that is not adequate because you're dealing with this continuous pressure on disposable income. So, Samuel, your advice, or just to give us a sense of hope, that this too is a tipping point. We're probably going through the worst period, and in the next cycle, things could turn around for the better.
Very much so. I'm hoping that we have the ceiling on the interest rates as they are at the moment. I'm hoping for some stability in the rates at the moment. I'm hoping that the next element within the interest rate cycle is downwards. And I have a further hope that we see the same growth as we did prior to the democratic elections in 1993, when the market was very tough. Those who bought then and those who bought just after the global financial crisis, when there was a lot of doom and gloom about and high interest rates, managed to invest and see and reap the rewards of their investment as the interest rates came down and property prices went up. That's what I'm hoping for.
We certainly keep our fingers crossed, but if reality also stares us in the face that since 1994, we had more rigid regulation around particularly the Consumer Credit Act in just affordability and making sure that there isn't reckless lending. We're not having as much credit as those glory days as we used to have.
Well, actually, that's an interesting thing because the banks have certainly played their part. They've been very positive in trying to stimulate the market, and where they can, they've been quite, I wouldn't say free, but quite keen to be able to actually lend money. Obviously, you have to fit within the lending criterion, you have to qualify, but if you do, they do have the funds and are willing to come to the party.
All right, Samuel, always lovely having you, but thank you indeed for joining us here on today. That is a Seeff Property Chair or Group Chair, Samuel Seeff, talking to us about the repo rate and cautioning that it should remain stagnant or unchanged because we're already in quite a high interest rate bracket, and that is not conducive for the economy, homeowners and new buyers as well.